Corn futures closed more than a nickel lower, and it felt like the corn market got absolutely clobbered today. Beans and meal were lower. Wheat futures were well off session highs, and bean oil and cotton did find a way to end the session on the plus side of unchanged. The big gains were in livestock futures. Heck, even hogs were sharply higher.
Live, girls go crazy for sharply higher hogs via Farm Journal Studios. This is AgriTalk. This afternoon, we'll chat with Brian Hoops from Midwest Market Solutions. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson. Now, welcome the host of AgriTalk, Chet Flory.
Boy, there at the start, I thought maybe you were thinking you were working your other job for some reason.
You did pick it up. It's like a song. Girls go crazy for sharply higher hogs. I think that's
got
how
it.
Goes, isn't it?
I got it. Yeah, I'm
that's how it
there.
goes.
It's exactly. I think that is the lyric. That is exactly what Billy was looking for when he wrote that song.
I think so. That's what he was trying to get to.
Welcome to AgriTalk. I'm Chip. That is Davis.
Hello, everyone.
Wow. Okay. I do not like the way that corn traded today. I do not like the way that soybeans traded today. Soybean meal. I'm even going to throw wheat into it. Wheat was higher, but it just was SRW wheat, I guess, was steady to slightly lower in the front month contracts. But just for the most part, it was almost a give-up day, Davis. Almost a day in which the corn market said, nah, we don't need to trade higher. Beans, we don't need to do that.
Refusing to mirror the upward move in crude oil. The WTI August contract now up a penny on the day, $80.84. So not a whole lot of fuel for the fire right there in the crude oils.
Well, and then the dollar index, the dollar was trading. Is this the right time? Yeah, that's about the right time. It's still up 450 points, the U.S. dollar index. And so, the dollar index just traded higher until we got to about mid-morning and then started to back off. And for some reason, commodities followed the dollar in the back off. I don't get that. Yeah. Yep. We'll see what Bubba has to say about that. We'll see what Bubba has to say about this corn market, how it just kind of gave up today and what it might mean for us going forward. And then, of course, we've got Brian Hoops from Midwest Market Solutions. We're going to talk about getting you ready for Friday's USDA reports. And, of course, we'll take a look at some of the other fundamentals and risk management ideas that Brian has got. All right, you ready?
Mm-hmm. I'm ready. I've got December soft red winter wheat futures opening slightly lower today. They spiked support at yesterday's low and then rallied on general commodity strength to trade higher at mid-morning. The market lost value in afternoon trade with December SRW closing in the lower half of the day's trading range, but slightly above the opening range. Traders continue to monitor crop conditions in the Black Sea area, but they say Russia's lost production potential has already been accounted for. Harvest progress in the U.S. is adding hedge pressure, but positioning for Friday's acreage and grain stocks reports from USDA should limit downside price risk. December HRW wheat futures were 3 cents higher at $5.99. December soft red wheat up 1/4 of 1 penny to $5.83. September spring wheat closed at $6.04. That's up 1/2 cent today.
Yeah, and like I said, the markets were well off we're off session highs, and that's really the big concern here in these markets as we take a look at it. I mean, the September, I'll back up to the September SRW contract today, put in a high at 559, and it closed at, the high was at 572.5. We closed at 560, so 12 cents off the high.
Well, the forecast for drier conditions in northwestern production areas and the potential for timely rains in the southern and eastern areas of the Corn Belt conspired to erase mid-morning gains in the corn market and to send prices to new contract lows. Ethanol production in the weekend of June 21 averaged 1.043 million barrels per day. That's actually down 14,000 barrels from the previous week. Ethanol stocks were down 194,000 barrels on the week to 23.423 million barrels. Traders also built in renewed uncertainty about Mexico's ban of GM corn imports. September corn futures were 6 1/4 cents lower today, 4.25 1/2. December corn down 6 1/2 cents to 4.36 1/2. March corn futures closed at 4.48 1/4. That's down 5 3/4 cents. Sept at 4.25 1/2. I don't like that, dude. It's a little lower than I'd like it to be right now.
It's a little lower than a lot of people would like it to be. No question about that. That story on Mexico's ban on GM corn, you had it this morning. They're saying that because they're importing so much corn, well, it's not doing anything to restrict the imports of U.S. GM corn. Well, right. I'm sorry. The reason that they're buying it as aggressively as they are is in advance of shutting the gate on GM corn from the U.S. That's the big reason.
Well, November soybean futures opened fractionally lower and rallied to resistance at 11.20 and then dropped to close below the opening range and near session lows. November 2024 bean futures are now threatening to trade through psychological support at $11 for the first time. It was a role reversal on the soy products, with soybean meal lower and bean oil higher as spreaders exited long meal short oil positions. Traders are generally aware of crop issues in the northern production areas, but remain convinced there is more to gain from the rains than is being lost at this time. August beans 3 1/4 cents lower, 11.42 1/4. Sept down 4 1/2 cents, 11.07 1/4. Novi beans closed at 11.07, down 4 1/2 cents, Chip.
Yeah, the July soybean meal contract today was down $4.40. July soybean oil up 69 points. So a lot of spread unwinding there. We'll get to the rest of the markets at the start of the next segment. Let's bring in Todd Horwitz, BubbaTrading.com. How you doing, Bubba?
I'm not doing very well, Chip. How are you, buddy?
Well, yeah, kind of the same, man. Corn was a mess today. Corn was a mess.
How about wheat? Up 12 cents and closes lower on the day.
Yeah.
This is as ugly as I've ever seen it. And there's like, don't get me wrong. I mean, I'm still long, but there's like no hope. It's just like every time they try to rally, I said this morning that they had to add on the gains, not take them away. And of course, they took them away across the board. They all got higher on the day and they were all lower on the day. It's an ugly picture. It's, maybe it's got something to do with China buying farmland by the 19 U.S. air bases.
I think the market needs to get people like you and people like me saying things like, there's no hope. That was ugly. This is, before the market's going to find some, the guts to go ahead and see some short covering, right?
I honestly think there's like a finger on the scale of this product right now. There's no reason for the action. There's no reason not to have had at least a squeeze to make you think they could go higher, and they haven't done that either. Basically, every week we talk, they're lower and they're a little bit higher and then they go lower. It's a very ugly market right now. It will turn at some point, but I do think that there is a huge seller in it, and I wouldn't, who I think it is. So I mean, I'm not saying that that's 100%, but there's no logic to the market what's going on right now. When you look at all the markets combined, the grain market is the most puzzling you could possibly see.
Well, it gets easier to make the inflation's under control claim when the commodity markets are under pressure, isn't it?
Listen, it's only under control for the farmers who are getting killed on the inputs versus the output. That's the real problem here. There's a lot of issues. All right, babe. Thanks, guys.
You bet. Todd Horwitz, Bubba Trading. Brian Hoops next.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind.
Clobbered. Corn got clobbered. That's what I said in the open.
Biff.
Yeah.
Pop.
That might be my new favorite technical term. Clobbered.
You like that one?
I think I do. I do. It was the opposite of getting clobbered in the livestock trade today. Why don't you fill us in there, buddy?
Absolutely. You know what? I'm gonna start with cotton, actually. 27 points higher in the December cottons. 75.34 today. On your livestocks, heavyweight choice graded box of beef was 44 cents lower this morning. But at $322.95, the beef market continues to provide support for live cattle futures. June futures led the rally today as the market converges with last week's record cash cattle trade. August fat cattle today were $2.32.5 higher at $186.75. The October contract was up $1.77 to $186.12.5, and August feeder futures up $2.72.5 to $261.77 and on the snout side, July lean hogs gapped lower and opened near session lows and closed solidly higher in near session highs. July hogs today 90 cents higher at $89.90. The October contract up $1.77.5 to $75.37.5. Chip.
All right. Thank you very much, Davis. Let's bring in Brian Hoops, Midwest Market Solutions. Brian, how are you?
Hey, guys. I'm doing well. Good to talk with you again. It's been a little while.
Yeah, it has been a little while. It's great to talk with you again, man. I always enjoy our conversations about the livestock trade, so I want to start there if we can. Davis, what did you say the heavyweight choice box beef was? $322.95.
That's right.
Brian, $322.95 in the heavyweight choices. That's an impressive number.
It is. It's a great number. And, you know, we're selling some product at these higher levels, but not a lot of product. And that's going to be the question, and the kind of concern is, can we sustain these price levels? I don't think we can. You know, we talk about box beef and how many loads that we're selling. We've sold the fewest loads so far this year since 2017. So our demand is slow, and it probably will continue to be slow at these higher price levels. I think right now we're in a situation where we will see some cash trade develop at these higher money. But after that, I'm a little concerned about how much demand we're going to have going forward. And that lack of demand is, I think, one of the things that producers should be looking at and considering when they're looking at these live cattle prices, especially into the fall and into the winter months. There's some very good pricing opportunities out there, and I certainly think you want to take advantage of that. Everybody remembers a $30 drop that we had started in September of last year. I don't think you can rule out that we'll see another price drop this year. Maybe not a $30 drop, but at least we could see some sort of a pullback from these areas, and it could be substantial.
Yeah. You know, a $30 pullback, I mean, I hate to say it, but a $30 pullback just on a downside correction seems completely reasonable to me. It's 15%, right?
Right. Yeah. At these price levels, it certainly could happen. You know, we had a correction from even from March. I'm looking at like the August contract. If you're looking at home, the March 25th, we dropped from about the 185 area down to 168, 169, just within a 3-week window. That right there is a $15 drop. So we could easily see that sort of a correction again, because we're not exporting a lot of beef. Consumers are pulling back from these higher prices. There's a huge demand for ground beef, and we just don't have enough slaughter cows to meet that demand. We have plenty of other cattle to meet the demand that we have, but just that ground beef, consumers are wanting to make meals at home, but not necessarily go out for steaks or buy a steak and bring them home to eat. It's the consumers are very picky at these higher price levels because there is a real discrepancy between pork and turkey prices, chicken prices, and where the beef market is right now.
Yeah, there certainly is. Certainly is. Just the simple fact that I said a $30 correction seems reasonable. Number one, I heard the screams from out in the countryside, people saying, you shut your filthy mouth to that, because a $30 break would be devastating to a lot of cattle finishers out there. There's no question about it. But just simply because of the way that the market is traded, a steep downside correction can't be ruled out. That's why, I don't know, Brian, that reason alone is enough reason to get some downside price protection in place, isn't it?
I think so. And these are probably the most expensive calves that producers have ever bought and put into feedlots. So this is what you really have to protect, is when you have this expense. And not that corn is a large expense right now, but it's not $2 corn either. When you have corn like this and high price feeder calves and you're feeding them out, there's a lot of risk here, and you really have to manage that risk.
Yeah, certainly do. Hogs were higher today. I think that's the best thing that I can say about that market, Brian, is that they actually found a way to close higher today.
Yeah, and it's been a long time coming for the hog market. We saw back in April, early part of May, market knocking its head against weekly resistance and could not get above it. And since that time, we talked about $15 or $30 break in cattle. We've dropped these August hogs from 107, 108 down to 88, and that's with today's rally. So it's been a $20+ drop. I don't know if the hog market is ready to recover and have any sort of a meaningful rally, but maybe this type of a break is enough, and we can have some sort of at least a technical correction.
Okay. Yeah, I would love to see it string together. Even 5 days. Instead of getting a 3-day upside correction, let's get a 5-day upside correction in these hogs with some solid gains each day. I'd feel a whole lot better about that market, but I don't know. I don't feel very good about it right now. What did you make of how the corn market traded today, Brian? It kind of gave things up. And like Bubba went straight to the wheat and said, what about wheat trading 12 cents off the highs at the close of the day?
Yeah, none of these markets have had very good performances this week, I don't think. I thought Sunday night into Monday morning, Monday afternoon's close, maybe that would be enough of a downward move for now. And we have this report on Friday, and that uncertainty would give us some short covering. That really hasn't been the case. We've been in just a kind of a free fall this entire week, 3 days so far. It's been a real struggle for the corn market. We have not closed corn higher more than 1 day since June the 14th. I think that was just 1 day that we closed on an up day. And wheat's, kind of putting that same type of string together. You go back to May 28th, it looks like we've had maybe 2 or 3 days of a higher close of Chicago wheat in over a month. So it's been a long time coming. It's very frustrating. And, my family's from Northwest Iowa, and two of my boys live up in Sioux Falls where the flooding is heavy. And, we have clients and offices up in that area. There is a lot of people that are having flood damage, and it's very, very frustrating if you're having that type of damage and drowned out fields to see what's happening on the border trade.
Yeah. Yeah. I can't tell you how many pictures I've gotten from up in that part of the world, Brian. And I'm getting it from people that are driving by their fields, and they'll take a quick picture of them and they send it my way, but they're driving by those fields because they're going into town to help other people out.
Right.
It's just, it's just the mentality of the people that it blows me away. I mean, I get it. When other people are in trouble and hurting from natural disasters like this, they want to get in there and do what they can to help. Good. That's what good people do. And that area up there is just full of good people, isn't it?
Isn't that the truth? A lot of people around the Midwest, a lot of good people. We deal with farmers all over the country, a lot of good people that we deal with. And you just can't beat, people that are involved in agriculture for, if you want down home, good, honest people, that's the best. Yep.
And as all of this is going on around us, I think, the crop watchers, traders, corn, soybean traders are looking at it and saying, you know what we're gaining from the rain long term is going to be more than what we might be losing in some drowned out spots. Is that the bottom line?
That's how I perceive things as well. I know there's a lot of areas that are being drowned out and some areas that weren't looking very good to begin with. But yes, there is a flip side. There's rain in some areas, probably, places like Missouri that will have never had a better crop this year than what they're having so far right now. So yeah, it looks like, the rain makes grain mentality is hard to overcome right now.
It certainly is. Certainly is. Okay. We are in the middle of a conversation with Brian Hoops. Brian, you stay right there. We're going to get back to you after we take a break. Brian's with Midwest Market Solutions. We've got reports coming up on Friday. We need to go through some of the expectations and get what Brian thinks might be the impacts coming up next.
Let's go to the markets page at profarmer.com and check today's closes. For December, HRW wheat futures were 3 cents higher at $5.99. December SRW wheat up 1/4 of 1 penny to $5.83. September corn futures were 6 1/4 cents lower at $4.25 1/2. December corn down 6 1/2 cents to $4.36 1/2. August soybean futures 3 1/4 cents lower on the day, $11.42 1/4. November beans closed at $11.07, down 4 1/2 cents. December cotton today was 27 points higher at $75.34. On your livestocks, August fat cattle 232 1/2 higher on the day, $186.75. August feeder futures up $2.72 1/2 to $261.77 1/2. June lean hogs 90 cents higher today, $89.90. Get more market news every market day. Just visit tryprofarmer.com.
Wake up.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Our name says it all. AgriTalk. What more do you need to know?
And welcome back to AgriTalk. I'm your host, Chip Flory. Glad that you were with us. Davis Michelson is here as well.
Yeah,
Big Apple Joe. Big Apple Joe is on the board again, making sure that we get all the information out to you guys. Brian Hoops, Midwest Market Solutions, is our guest analyst today. Brian, big reports coming up on Friday, 11 o'clock Central Time. We get the quarterly grain stocks report. We get the acreage report. I think we can handle the grain stocks report pretty quickly here. Is there anything in particular that you are watching for in that report, Brian?
Yeah, I think the trade is really going to be watching the acreage, the planned acreage numbers. I think you look at what has happened historically. Well, 3 out of the last 3 consecutive years, 6 out of the last 8 years, we saw USDA raise corn acres in this report. Okay. And, so that history is kind of on the side of an increase in corn acres. We'll go back to the March report. The USDA said we were going to plant 5 million less acres of all products than what we had a year ago. So they certainly have some wiggle room to add a few acres of corn, soybeans, cotton, spring wheat, that sort of thing in this report. And you really have to watch what happens the day of the report, because whatever direction corn ends on the day of the report, it has carried through the following session, 13 out of the last 14 years. So we're going to have to wait till Monday. Really? For that to happen. But it's been kind of a historical pattern. 13 out of 14 years, we do the following day, whatever direction we trade in after the report. So it's certainly something that I'm going to be paying attention to. If we would drop corn acres dramatically, that really changes things, because you can debate the yield of 181 the USDA has, but you really can't debate the acres after Friday's report. This is going to be what we're left to trade with. Soybeans, last 3 years, we've seen big moves in the soybean market. I think average upward move is like 42 cents and the downward move is 26. And they've lowered soybean acres 3 out of the last 5 years. So I think it's the key thing to watch is how many acres we're going to be planting of corn and soybeans.
Right. The average trade guess, corn, 90.353 million acres. The average trade guess on soybeans, 86.753 million. Combined, I believe that's 177.1 on the combined corn and soybeans. And you had mentioned it. We felt like we were missing some acres after we got the prospective plantings report at the end of March. Seems to me, and I don't know, it seems to me like there's room on that number all the way up to 178.5, 179, Brian. So they could add even more than what the trade is looking for. Is that what I'm hearing from you?
I think we have to be prepared for that possibility. The ranges are really small. as far as expectations are, either adding or lowering acres. That's what my concern is, that the USDA throws us a surprise, but it may not be a bullish surprise, maybe more of even a bearish surprise, that they have some room to add corn acres based off of those 5 million less planted acres this year. I think it's certainly possible that that is a bearish surprise for us, and we don't need any more bad news. It doesn't seem like, because this market is just kind of in a free fall. And we need some positive news. We need something to change kind of the fundamental trend. And, I've been doing this 25 years, and there's just a handful of times in those 25 years being bullish grains after the 4th of July has made any sense at all.
Right. Yeah, boy, you got that right. Anything under 90 million acres on planted corn acres should get something of a bullish reaction, shouldn't it?
I would certainly think so. I think you'd have a very positive reaction to that if that was the case. Yeah, okay. If we have it, and I wish we had knew the answer what the USDA was going to say. We don't. I think you have to be prepared, though. We've been recommending hedges, during that spring time frame, because you don't get too many marketing opportunities during the year. So we've recommended to keep those hedges in place and ride through the report with them, just because you just have to fear that unknown that USDA gives us some sort of bearish news. If it's bullish, then you can lift those hedges, do some things later. But if it's a bearish, you may not have an opportunity to do anything later on. Okay.
All right. You mentioned the range on the trade guesses, 89 million, even up to 91.3 million. On soybeans, it's 85.5 million up to 87.5. So that's down a million or up a million on the bean acres from what we got in the prospective plantings report. You're right. I mean, they seem pretty confident that it's going to be within a million acres of what we got from NAS at the end of March. So interesting. Anything in the grain stocks report that you're watching for? Any usage trends?
Yeah, we would expect the usage to be a little bit large, the stocks to be a little bit larger than last year. So we've had bigger supplies of crops, corn, soybeans, and wheat compared to last year. Our demand hasn't really kept up with it. In the case of corn, soybeans, wheat, it hasn't been quite as strong as the previous year. So we do expect to see bigger stocks than what it was last year. Possibly corn stocks get a little bit tighter. That would be one bullish thing I think I could see, because export demand has been pretty strong over the last 2 months. Now, Brazil's corn harvest is faster than normal pace.
Yeah,
that's gonna slow our exports down for the rest of the summer. So USDA may not make any changes to that. They did not in the last supply and demand report. They just left everything unchanged, and I think we're probably looking at slower ending stocks, a little bit larger build compared to year ago levels, which doesn't help out our bullish case either.
Right. Okay. So with all of this in mind, as you make, what I'm curious about, Brian, is how you think these markets the corn and soybean markets are going to trade between now and the middle of July. I mean, what's the focus, and what do you think? I mean, if the crystal ball is clear enough, what are going to be the trends?
Well, I think you have to kind of remain on the defensive. If you look at the wheat market, look at the export, the wheat tender from Egypt yesterday. Look at all the countries that were included in that Egyptian wheat tender, and notice the one country that was absent. It was the U.S. And so you saw 4 countries participate in that tender to Egypt. Argentina is going to have a decent wheat crop. Australia is going to have much larger, 13% larger crop at least compared to a year ago. Those are countries that are compete with us for exports. So we're probably 7th, maybe 8th port of origin for the world's wheat needs. That's not a good situation to be in. If we're trying to rid ourselves of some wheat stocks, we need to be able to export some of this wheat. Otherwise, we have to push prices low enough that it goes into the feed rations, and that won't help corn market out either. When wheat market's tumbling, it's going to put some pressure against corn because of the wheat substitute. So you have to be, I think, really defensive. The next 3-4 weeks, if we have rallies, use those to fine tune your marketing, increase sales, increase hedges in all these commodities, corn, soybeans, and wheat. I'm down here in southern Missouri. Harvest is pretty active around here, and that's a little bit earlier than normal. So what that means is the double crop soybeans are going in the ground quicker than normal, and that theoretically adds yield potential to those soybeans. So we may have more acres, but we probably will have even higher yielding acres because of that double crop. So I think you really have to be on the defensive in the next 3-4 weeks for any late season rallies, marketing opportunities there.
Okay. All right. Very good. Very good. One thing that I had on the list that I wanted to ask you about, and I talked about it at the start of the show, was the strength in the dollar. It was a solid move to the upside today. Is it something that we need to watch here, Brian?
Yeah, I think it's one thing that we have to be concerned about is the ongoing strength of the dollar. I really don't see our U.S. economy cutting interest rates anytime soon. I think the Fed is between a real rock and a hard place, so to speak, where they don't know what to do. They can't really cut interest rates here because they're already concerned about inflation. And I think the dollar senses that by moving higher and to multi-month highs. I think it's the highest we've traded since like 2021 or something like that in some of the dollar contracts. It's going to put pressure. If you look at gold and silver charts, it's really taken the steam out of those markets, and we've started a downtrend in some of those. It's certainly not going to help us out as far as exports go for the grain markets with that dollar remaining strong. So election year this fall, maybe that will give us a little bit different direction, but at least right now that dollar I think is anticipating no rate cuts, and it's going to remain very strong.
Yeah. Okay. Influence of the energy markets on the grains. What are your thoughts there?
Yeah, I remember the good old days when corn would follow whatever crude oil did, and bean oil would follow whatever crude oil did. And right now, bean oil, corn, all just trading on its own weather fundamentals, and just largely ignoring the crude oil. There's a little bit of talk that maybe China's going to prop up their economy by buying some oil, and that would support this market. But I think the crude oil market at this $80 level, if we didn't have that instability in the world with some wars breaking out around in the Middle East, I think we'd be looking at upper 60s, lower 70s as a price instead of the $10 higher that we're at. So those will be kind of key factors for the crude oil market in the next several months.
All right, Brian, you touched them all: corn, beans, wheat, cattle, hogs, energies, interest rates. Good job, man. I appreciate that very much. Thank you.
Thanks, guys. Always good to talk with you.
You bet. Love it. Love it when we get a chance to catch up. Brian Hoops, Midwest Market Solutions. Okay. Boy, there's a lot happening in these markets right now, and we've got those reports coming up on Friday. Still a lot to settle out here. Davis and I will talk about it.
If the world is your oyster, we've got pearls of wisdom on AgriTalk. Welcome back to AgriTalk, everyone. Your pal, Davis Michelson, here on your Wednesday afternoon. So glad you've decided to join us today. Chip Flory's here as well. How you doing, Chip?
Oh, man, I just couldn't be much better.
Yeah. That's awesome.
Things are good. Yeah.
Well, I guess, unless you want to talk about the markets, in which case,
right?
Not so much.
If you want to talk about trying to dry out after the flooding, and or I guess there's a lot of reasons that. Yeah. There you go.
Yeah. Like we could probably lump in, a trip to the dentist office to have an impacted molar worked on. That might be in the same category.
That might be on your agenda. It's not on mine. It's all good.
Careful what you wish for. Commodities, according to Bubba, still stink. It's an ugly setup in the markets right now. Let's just remind some of our listeners, maybe. Sometimes this kind of stuff happens, dude. Markets don't go straight up forever. This is why we're always talking about know your
I don't
numbers.
think people are worried about the markets going straight up forever.
No,
I think they're worried about the markets going straight down to zero.
Mm-hmm. Mm-hmm.
That's what they're concerned about.
You know, at least crude oil can do zero and beyond.
And beyond.
Yeah.
That's right. That's right.
I don't know that we're necessarily looking at
I guess
that there.
we'd have to call that the Buzz Lightyear trade, wouldn't we?
I think maybe we would, yeah.
Yeah.
Make it prove the bottom and hop in with everything you got. But it's hard. It was hard to get a bullish sentiment from Brian Hoops. I want to go to this beef market. Choice graded box beef, 44 cents lower this morning, but that's at $322. Call it $323. Beef market continues to provide support for live cattle futures, but Brian was talking about some demand hits possibly arising from these high prices. Of course, high prices cure high prices.
It's a tough
maybe
market.
323 is the magic number, Chip?
Well, it's a tough market to read. There is no question about it because of the amount of demand for the product that Brian was talking about, ground beef. It is so good, the demand for ground beef, that the only way that the industry can keep up is by importing. Because we are not culling enough cows. There are not enough cows coming out of the dairy industry and into, the cutters market to satisfy the demand that we've got for ground beef. So there's a lot of imports of trim that is happening right now, and it's making for some I don't want to say confusing market signals, but concerning. That's the word that I'm looking for. Concerning market signals, because when you do have a futures, a cash market that is trading at a level that encourages imports of that product, you better be concerned, because if the U.S. market wants to import beef, there's somebody out there that's willing to sell it to us. There's no question about it.
Yeah. Another thing that Brian mentioned, we've talked about this before on the show, after July 4th, forget your bullish sentiments for a while. Seasonally, that's the end of that. We're coming up on July 4th pretty quick here. Do we scramble forces? Do we circle the wagons? Dude,
is that next week?
Yeah.
It is.
Yeah. I know that because my landowner's coming out on Friday, and so we must be at the beginning of a new month.
Wow.
Yeah. I'm just curious. I mean, it doesn't leave us much time to consternate, to think, to strategize. I don't know.
Yeah, and the thing is, the June 30 reports that we get are, some of them have history of being some of the most market-moving reports of the year. The acreage report and this mid-year quarterly grain stocks report. It can, and well, I should say the combination of these reports have caused some major price movements in the past. And like Brian was saying, if corn's down coming out of the acreage report, more than likely it's going to be down. If corn's up coming out of the acreage report, the day of the acreage report, odds are the fundamental outlook has changed somehow, some way, because acres are not as many as was anticipated. And if that is the case, and especially with funds as short as they are right now, you would think that if Friday's reports gives incentive to the funds to cover the shorts for one day, that should be enough incentive to cover shorts for multiple days coming out of it. I would think. Geez.
Well, the market can stay illogical longer than we can stay solvent, I think. I would just lean back on that, especially now. This trade doesn't, well, and maybe it does. Maybe that's the scary thing, is maybe to enough people this trade makes sense just on the rain makes grain. There's no such thing as a bad rain in the Midwest this time of year. I'm hearing increasing frustration with those impressions. People said, do traders really think that? Well, they need to come out and see the holes, and rain makes grain. That's where we are. That's
a big part of it, dude. There's no question about it. I mean, no question about it that the amount of rain and the crop conditions, yes, they have deteriorated a bit over the past couple of weeks, but the USDA crop condition ratings are still relatively strong, 69% good to excellent on corn. That's not enough to scare the funds out of being short at this point. I don't think that's the case at all, and I think traders do believe that the rain that is falling right now is doing more good long term than it is short term damage to the crops. National Weather Service 6 to 10 day outlook, July 2nd through the 6th, has got above normal temperatures for the southern areas of the Corn Belt, northern Illinois to the south, I'll call it. Near normal temperatures in the northern production areas, above normal precipitation expected over most of the rest of the Corn Belt. You jump out to the 8 to 14, July 4 through the 10, above normal temperatures over the entire Corn Belt and above normal precipitation expected as well. Thank you so much for listening today. 10:06 tomorrow morning. We'll do it again here on AgriTalk.